us, just talking about the market in China in general, because obviously you just opened your new office in Shanghai. You've been in China for a decade now, but the insurance industry itself, the mainland, has kind of gone from boom to bust lately. The regulator himself was fired earlier this year as well. What's your read on the industry so far?
Yeah, well, it's been an incredibly fantastic journey for Lloyds. We've actually been insuring risks in China for over 200 years, but that was all done from our traditional home base back in London. So we decided that we needed to get close to the market, so we opened up in China 10 years ago, and it's just been an amazing story since then. From a very, very small start here, we are now writing over 2 billion RMB of business. And with our business volume and the capital that we've injected here into the country, we've now got assets here of over 6 billion RMB. Now, the insurance market is actually outpacing GDP growth here in China. And this is why we see it as such a great opportunity, and we want to be at the heart of it. Now, Lloyds has always done very specialist type of insurance. And we're here actually sort of introducing new types of products to the market, really working with the local insurers to be able to enhance their product offering. We tend to do big, complex insurance risks. And some of the latest risks that we're introducing are things like insure yourself against cybersecurity and cyber attacks. And we've got really exponential growth going on at the moment.
And certainly, you mentioned about a little bit about infrastructure as well. And I know your part, Lloyds is part in terms of the One Belt, One Road initiative. And it's been interesting, ADB putting that funding gap when it comes to some of these infrastructure projects in Asia at about $26 trillion. And some saying that insurers can play a big role in filling that gap and funding some of these projects. Not exactly a very common thing for insurers. But what's Lloyd's take on all this right now? I mean, there's still a lot of traditional rivals, some of your rivals out there that say this is just too risky of an investment.
Yeah, so we don't necessarily lend the money up front. Obviously, insurers have a massive asset base, so they will do investment in certain projects. But if we think about the core product of insurance that Lloyds is offering, we will be insuring, hopefully, some of the construction that's going on all along the Belt and Road, and we're pretty excited about what that might mean, and particularly because some of this will be very groundbreaking. So whenever there's anything very new, a new project, that's what Lloyds does best. Well, Lloyds is quite a unique market. It's a bunch of syndicates, so we share risk all across the market, which always enables us to take on the sort of pioneering new things that are going on. So as the Belt and Road starts to grow and develop, once the funding's there to actually start some of these projects, Lloyds can come in behind that and actually provide the insurance, the financial protection that some of those investors will want. So we do see it as a good opportunity over the long run, though, because, of course, this is a big investment over a considerable number of years.
Well, certainly to make money in the insurance industry, you have to take on risk. I guess the question is how you assess it, pricing the risk in such a way that you make money almost regardless. And I think it's so interesting to look at cyber insurance, because one of the trickiest things about cyber attacks is no matter what you put up, antivirus, anti-this, anti-that, the hackers find a way around it. I would submit that that's even a riskier proposition than insuring the Belt and Road, unless you are going to charge a lot for cyber insurance, again, to make sure you come out on the profit side.
Well, yeah, taking on any new risk is a bit of an unknown. But that's what Lloyds has always done. When the first satellite went up into space, we didn't know the chances of it not making it. So we've always been at that sort of pioneering end. Now, for cyber, one of the new elements about that risk is that it knows no geographic boundaries. So many of the traditional risks that we take on, be it earthquake, hurricanes and windstorms, typhoons in this part of the world, they usually are confined to a certain geographic area, albeit it can be quite large at times. But cyber, the cyber security risk, it knows no geographic boundaries. And this puts an incredibly different angle on trying to assess the accumulation, which is our biggest issue here. Now, we've done a lot of research into potential cyber attacks and what they could do. One of our latest pieces of research shows that, say, one of the cloud service providers was taken down. That could create a cyber event in the region of something like $53 billion of loss, of financial loss. That's putting it around the same magnitude of the damage incurred by Superstorm Sandy. So that's the kind of extent that we see potential cyber losses being. But it's not going to put us off. We know that businesses need the protection because this is the way the world is moving. Everyone is using technology. No business is going to be immune to it. And we've got to be there to be able to really fulfill the purpose, which is take risk away from companies, de-risk their investments, and really enable human progress. So we're willing to take the cyber risk on. We estimate we've probably got a 25% market share. We write about $1 billion of cyber premium now, specific cyber insurance premium. Although most of it's coming from the US at the moment, 80% of that is bought by US firms. We are seeing an increase in demand through other parts of the world, particularly when there's regulation introduced. So here in the Asia Pacific region, Australia introduced some new data regulation, and suddenly we saw an uptick in cyber insurance. Demand for cyber insurance went up by about 2,000% year on year. So often the regulation and the regulatory environment drives the demand for something like cyber insurance.
Just have to ask you about Brexit. Among your colleagues, business associates, friends, people you know in the government, is there a little bit of buyer's remorse at this point? What is the mood? As, of course, Theresa May is winning a fairly important show of support in her own cabinet.
Yeah. So we've got our own contingency plans ready for the Brexit, as most of the financial services firms are doing if they've got a UK or London-based business. So we are going to set up a subsidiary in Brussels so that we can continue to provide that coverage for all of our customers based in the EU. And I'm sure many of the other financial services firms are doing the same. However, I did just read in the news about potentially trying to negotiate something different for the financial services segment so that there can be a long transition period so that actually companies within the EU 27, companies within the UK can actually still trade together, and there could be some segregated financial services agreement laid out that could mean that businesses and customers particularly can still have their liabilities and policies fulfilled. Now, this is very, very new. We haven't heard this before. This just recently came out. That would be really good news for the entire segment. But I can tell you that we're in the risk business, and we're always going to make sure that we can secure things for the future. So we will still push ahead with our own plans to open up in Brussels.
I guess it's a little too late to sell Brexit insurance.
We're not selling Brexit insurance at the moment, no. We do sell most types of insurance, but not Brexit insurance.